All right, so welcome to the SafeYields podcast. It's your 15-minute check-in on the smartest places to earn, build, and explore in DeFi. My name is Mark. I'm the CMO of SafeYields, and today I'm joined by Akshit from Autonomint. It's a protocol which is powering USDA Plus, a delta-neutral omni-chain stablecoin backed by ETH and LRT collateral. So, Akshit, great to have you here. Would you mind telling us where you're calling in from and tell us a little bit about your journey?
Yeah, thanks, Mark. Thanks for inviting me. And so, yeah, my name is Akshit, and I'm basically reside in India. And my team and I started building out of India itself. And I've been in the crypto space for the past 7+ years. And initially, I was working for institutional clients, specifically in the blockchain area. And I have worked for a bit of time for the government as well, Indian government. While they were dabbling in the blockchain and the crypto sector, I was working along with them. But then I started purely working in the crypto space. Prior to this, I was a head of growth at a cryptocurrency exchange. And started participating in some competitions and where I met my co-founder. We won some hackathon competitions, and till then, this is the project which I've been building. And yeah, this has been my journey, and let's see.
Awesome. Welcome. Glad to have you here. But
Yeah,
Yeah.
thank you so much. Philippe, would you mind telling us a little bit about yourself as well before we go forward?
well, I guess this is turning like a bit of a repeating section, right?
Yeah.
But yeah, for those of you who are new here, I'm Filipe, founder at SafeYields. We're building a decentralized ecosystem for AI-driven trading and DeFi strategies. Uh, DeFi is very difficult for everyone. Just want to make it simple for you guys. You're supposed to be a one-click solution for you to get your portfolio management on the spot, and that's what we do.
Thank you. All right, so let's just jump right in. So this week's correction was absolutely brutal, but MIAR, which is our signal engine, it still posted positive 0.3% by shifting strategies in the middle of the week where it was like total chaos. So Philippe, would you mind showcasing or talking a little bit about the SafeYields news? Like it reminds us about how much the edge comes from proactive systems, kind of like Autonomint's delta neutral engine.
Yeah, I guess I'll just showcase my window. So, I mean, you guys know, right? It's been brutal. So, I mean, we've been having some recovery here, but I guess like two days, 2 days ago, 3 days ago, we were like 10% down or something like that. Fortunately, our algorithm just kept going up. That's the good thing about what we've been building. Because we're building just such sustainable yields, it doesn't really matter where the market goes. Just the technology just goes straight up. It might not seem like much, 1% a month, but you know, if you're tackling a market of very volatile market, I mean, this makes a difference in the long run. This is last month's MAI performance. This week gets a drop down from all of the things that have been happening. We've done almost around 0.2%, 0.3%, as you mentioned. It's a steady growing curve, and that's what we like to see.
I'd also like to add to that like our protocol also does auto compounding, so pretty much like the power of compounding 1% a month. It will actually be more spaced out over an entire year, so that's absolutely incredible in the
Correct. Yeah.
market, like how the market is looking right now. You couldn't ask for more, I guess.
Yeah. I
Yeah.
mean, that's some excellent resilience, I mean, which SafeYields has shown. And yeah, I mean, crypto markets has been volatile this recent times. Not only crypto markets, entire world has been volatile. And crypto markets are basically much more familiar with this territory. And so, but I guess that's a sign of the delta neutral products which we have here. It's not like something which is crypto native only. This kind of products used to be in the trade also, and this is a sign of mature markets. A lot of big hedge funds and a lot of big players in the space, financial institutions, specifically utilize data neutral products, and all of their proprietary does utilize a lot of different hedging techniques. And what we at Autonomint has also kind of delved deep into that, and how we can create a product which is not is a friend in the bullish cycles as well, but can also work equally well in the bearish cycles as well. Because if we see a lot of crypto markets currently, if we have to say, are fueled by speculation and leverage, and a lot of existing products which are coming out there. If the leverage demand wanes over time, then the yields might disappear, and that is also reflects to the sustainability of those business models. That's where Autonomint business model is. We hedge against volatility, and even if there is a demand in the market during bullish cycles, we can cater to that. But even if the market is bearish, then we have mechanisms in place. We can hedge your volatility and also provide you returns on that times also. So there is much more to that, and I will definitely be able to explain further into that as we go deep.
Yeah, of course. I mean, that's you know, it's the Athena narrative actually. So Athena, I think they made a great job at hedging against market volatility into over collateralizing their stablecoin USDA, and I think you guys are using it, and a lot of protocols are also leveraging USDA. And I think it's for institutions, especially. You have on the retail market, you have these guys. There are you know a lot of degen people, but institutional money is also important into the space. That's what makes in a way it's what makes retail invest more too, because it gives them confidence. So, and for retail we need to have sustainable yield, something that it's trustworthy, transparent. And yeah, I mean, that's why we invited you guys. It's because you're all also in the same narrative as we are, and Ethini is as well.
Yes, yes. And so the delta neutral aspect, right? And you talked about Ethana, and Ethana, which does delta neutrality through hedging through external markets, whatever Binance or other exchanges which are there, they route their liquidity to those exchanges and they'll take their power positions or hedging positions there. So they are kind of reliant on some of those liquidity there, and they are only exposed to ETH as an asset, not the entire breadth and width of the entire amount of assets which we have in the crypto space. What we have created in Autonomint is an internal hedging mechanism, which kind of doesn't rely on some external party to do that. What we call that as DCDS, it's called decentralized credit default swaps. So instead of routing our liquidity to some external party, we can hedge it internally itself, and people can come in, they can deposit any kind of stable coin or any kind of volatile token into this DCDS, and they can become a part of providing this hedging protection to the users who want this. And it's a new kind of product in the market, and we are very much excited how it goes along. And just like so I also know SafeYields, and SafeYields, you guys have been optimizing yields not only across ETH but across multitude of assets. So that's one of the great things, and kind of what new protocols and mature protocols demand. I guess institutional liquidity would be flowing to this kind of new areas which we guys are building.
Yeah, I agree.
Great insights, guys. So to my understanding, both SafeYields and Autonomint are practically spearheading like this new angle of DeFi, which is super exciting, and obviously why we're talking right now. And so yeah, let's move on to the next segment, which is it's kind of like the macro conditions in this economy. It's obviously relevant to everybody. So we got the topic called about President Trump and all of these tariffs. So recently, he's just been tariffing everything, but he pulled the trigger on pausing, which subsequently triggered a rally of some sorts, I guess. Bitcoin went back to around 8K, dumping down to about 76K, I want to say. Correct me if I'm wrong. So obviously, ETH and all the others followed. High tide raises all ships, as they say. But markets are obviously still nervous. There are trade tensions. We got elections going on in Canada, etc. The policy shifts are adding to the volatility. So, how does Autonomint's delta neutral design help navigate this kind of global economic turbulence?
So yeah, essentially, our mechanism has been built to deal with or thrive in this kind of volatile environment. And typically, when the volatility comes, and a lot of this is due to external factors, but a lot of this is due to people just trying to stay away, and they don't want to invest it anywhere else. So we have seen that there are a lot of products out there, like entire $93 billion worth of market on ETH, which is kind of built on top of smart contracts. These are providing yields through staking, restaking, and all of the different aspects. But if the end of the day, the markets are volatile and the ETH price falls by like 5%, 10%, 20%, 30%, then what's the use, right? All those yields disappear. So you need a product like in the market which can come and which can hedge that exposure. But the thing is, hedging that exposure specifically in these volatile time periods when a lot of things are happening, it's very expensive. If you go to derivative or any kind of derivative marketplace, you have to pay like this in the current times you have to pay more than $150 just to hedge one ETH for 1 month. That's quite expensive. And along with that, they do not provide any upside on your asset as well. You are limiting on that upside, and they don't accept a lot of staking or restaking assets also. They are just mainly limited to USDT or ETH or some basic assets. So we need a product which basically can do all of those things. And what our core value proposition is that we are able to hedge ETH at a very cheap or affordable price. In fact, it can go down to near zero cost as well. So people can come and they can deposit ETH specifically in these volatile time periods, and they can mint back stable coin up to 80% of that value. So it's not like we are asking them to lock their liquidity in our protocol. They're getting that liquidity back. And on top of that, they are also able to hedge that at near to zero cost. And they are also able to retain that upside. So it's a perfect product for volatile markets and for calm markets as well. Yeah.
Amazing. So I guess you could call that real resilience. While others are reacting, USDA Plus stays predictable, which is, I think, that's what investors, serious investors, really do enjoy. So let's keep zooming in on, for example, this week's Ethereum dump following Bitcoin, obviously, but it exposed vulnerabilities in ETH-backed stables. For example, FDUSD, which partially depegged after rumors of insolvency, also triggering growing concern about overexposure to unhedged ETH. So how does USDA Plus avoid similar risks?
So we have kind of hedged our ETH with three different mechanisms. We have an internal hedging mechanism, which is DCDS, where we can hedge it. And if the funds in the DCDS are not up to that much, then we are also integrated with POPs as well. So that's the second line of defense where we can go and hedge our ETH. We are integrated with protocols like Synthetics and CMEO. CMEO is a big derivative infrastructure player where we can route our liquidity and hedge it. And if the positions are closing near to liquidations and we need some mechanism to liquidate those assets, then also we are integrated with keeper networks. And if we don't want to sell that ETH, mostly if you see in this volatile markets, so what we have seen with FTUSD, why it's depegged or any other kind of stable coin which is backed by volatile collaterals, it's because during this volatile markets there is a cascading liquidations. A lot of people are selling their ETH collateral because it has neared the liquidation territory, and it's flood Dexis markets and a lot of selling is happening, and then the entire market cascades. We want to avoid that. So instead of selling it directly into the market, we take a pop position which can hedge it, or we can hedge it internally with TCDS. And if both of those doesn't work, then we already have keeper network and we can liquidate it. So it's quite a resilient mechanism, and the peg would be kind of fine in all of these scenarios as per our simulations, which has shown.
Awesome. It's kind of
Awesome.
like a safety mechanism inside a safety mechanism, which is pretty cool.
Yes. Yes.
It can't get too safe, in my opinion, ever.
Yeah,
And I
true,
think it
true,
also
true.
like
Especially
just
in this space.
showcases the power of DeFi. You know, it's like not being dependent on centralized reserves, for example. You know, it just really shows the power of DeFi. So super exciting
Yes.
stuff.
Decentralized reserves, and it's fully on chain, fully transparent, and backed by fully on chain assets, regulations or whatever that doesn't impact us. And I think it's purely with the ethos of DeFi, and more the best thing which is that it's aligned to Ethereum, and a lot of products are kind of shifting away their value from shifting that value to centralized exchanges and others. But I think we are bringing that value back to Ethereum by building a product fully on chain, and it's a multi-chain product. So L2s and Arbitrum and other chains, we can bring that value back to us as
Got
well.
it. Agreed.
Amazing. So moving on to the last topic about macroeconomics and news from the last week, we have the regulatory tone, which is also shifting as well. People are starting to take crypto more serious, I want to say. So the US also just disbanded its crypto enforcement task force. Alongside, the EU is warning about stablecoin risk. So how does Autonomint maintain trust in USDA Plus throughout these changing environments?
So this is a very interesting time, and there is a stables draft which is also being right now being formed by the Congress, and it is due to publish soon. One of the core things which they talked about in this stables draft, that no stablecoin can pass yield back to the user. So right now there is a debate or in the industry whether stable coins should fall in the securities, or if they are falling in the securities, then it's essentially a money market product. And for money market, because we are passing on the yields back to the users, so only money market products, T-bills, and only those kind of do that. But if you're saying that it's not a money market product, then it's a savings instrument. And if it's a savings instrument, then it is directly in competition with the bankings, all the banks in America. It's like a deposit itself. And that's very tricky for the government on how to deal with that, because banking is a core life and sustenance of the entire economy. If you go to typical banking institution, you are getting very low savings interest rate, less than 1%. But what we are seeing in stable coins, which are backed by T-bills, they're giving more than 3 to 4%, and it's stable. So why won't a typical user take his deposit away from a bank and put it into a stable coin? So that's a big threat and risk to the entire space. So government, I would say, yeah, they are thinking on this, and they are also kind of reasonable and logical in that respect, that what will happen to that banks. But banks are rich and they are already making a lot of money, and I think it's a better stablecoin is a better product, and it's a demand of the future. It's a much more flexible product, and it's a much more global product as well. A person sitting in India can tap into the yields which is coming out of America. So all of these regulatory things, definitely it will come and go, and we have to see how it plays out. But Autonomint, it's a fully on-chain product. Smart contracts are fully on-chain. It's fully audited. A lot of new regulations which are coming. They're also asking whether a lot of different things, whether the token supply can be minted out of thin air or not, all of those things. Nothing of that is happening in Autonomint. So all of those things, disclosure requirements, we are fully out there. Anyone can check that, which is the demand of the regulations. So I think we are fully compliant in that aspect, and so that's make us more resilient to any kind of upcoming regulations as well.
Amazing.
Got it. Yeah, that's good.
So you guys are clearly showing adaptability, which is super key, and building with that in mind as well. I also want to turn this one over to you, Filipe. Where is SafeYields, like, with regards to regulations? Where are we, ahead of the curve, or are we catching up? What is your stance on this as well?
Yeah, ahead of the curve is kind of like an abstract concept, in my opinion.
Mm-hmm.
You know, as Akshit mentioned, the regulations are just trying to keep up. Governmental issues is something that, when the time comes when they're just way below the line, they just try to get new things up. We are definitely a Regis company, and we will adapt as the market needs. It's just something that I mean, as a founder, I don't want to go to jail, so that's what we will do. I have no other option. It's how things work.
As a not co-founder, I don't want to go to jail either.
You're good. You're good.
Thank
You're
you.
good. I think if something happens, that will be me.
It won't.
Like, we're transparent. If we give our faces off, we show our faces. Going to jail is not something that is in my pipeline.
Yeah, definitely.
We try as we give all of our efforts to keep compliant to.
So like
what's
Autonomint,
happening
we
in the
also take
space.
regulations and future regulatory changes very seriously.
Yeah, of course. It's just that things are changing so quickly. 6 months ago, we were 100% compliant, and now we have to shift some things. It's just how the space is working. There's no way we can go around it. I could be telling you guys, okay, so we're 100% compliant, but we're not, because the space is just changing so much. You cannot keep up. You have to keep upgrading and upgrading. But fortunately, we have an advisor who's a lawyer, specialized Web3 lawyers. We're tackling the Web3 space in the legal side of things as much as we can, just upgrading things as the world moves on.
Amazing. Thank you. So we're about to wrap up the news part. So just for anyone tuning in right now, Akshit, would you like to give us the 60-second version of what Autonomint is and what USDA Plus has to offer?
Sure. Yeah. So Autonomint is a lending protocol. It's an omni-chain lending protocol that makes lending quite affordable and hedging quite affordable. It's minting a USDA plus stablecoin. It's a fully on-chain stablecoin, 100% backed by ETH and ETH LRTs. All of the yields which are generated by ETH LRTs are fully passed back to the users. None of that is kept by the platform. And it's a multi-chain product as well. It's built on top of Ethereum, Base, Mod, and Optimism. And one of the cool things about this is that a lot of other lending protocols, just if you see other like MakerDAI, they just mint stable coins, but we also hedge that. And we not only hedge that, we hedge it at a very cheap price. In fact, it is the cheapest way to hedge anywhere across the market. So people can get USD plus stablecoin liquidity, they can hedge it, and they can also retain the upside of ETH through our platform. So that's like the trifecta which we are offering out here.
Great rundown.
So basically, let's imagine, you take a stable coin and then you'll mint your own issued, stable coin and then hedge it against market volatility on the other end with the credits, right? So that's what you guys are doing. That's how you
Yes.
keep peg.
Yes, we have the 100% backing of ETH and ETH LRTs, so that is there. But if the ETH price is falling, then we are hedging that through our decentralized credit default swaps. So we limit that. We hedge that volatility up to 20% downside. If the ETH price falls by more than 20%, then we initiate the liquidation, and those liquidation happens through different mechanisms as well. For a user, he is getting uh, an asset which is like fully backed by ETH. But even if the ETH value falls by 20%, then also he is holding 80% of that value in stable coin. While the Ethereum value is also has fallen by 20%, that is at 80%. So he is holding the best of the. He is not losing out on its liquidity in any way, which is in the cases in other areas. For Ethena, you are just swapping one asset, you're giving them your ETH and you're getting the stable coin, and they are retaining that upside. You're not getting that upside, you're just holding a stable coin where you can earn yields. But that is not in our case. You retain your upside, you get the stable coin, and you can also do a lot of different things. We have a lot of different strategies. So yeah.
Amazing.
I do like the narrative around Athena, it's just they've managed to wrap up some, billion-dollar market.
Yeah.
And there's so much creative stuff that can be done around it. I mean,
Yes.
us fields, we were inspired by Athena, of course. We were very conservative in our approaches, but then you guys come along and just have this whole new concept. I'm very curious to see how it goes along the line
Yeah.
and how it works and how it behaves within markets, different shifts. So I'm very curious to see how we see your protocol going on into the future. Especially like we've talked about this, I have nothing to say here, but maybe there will be something going on between Safe and a new protocol as well. And I think that we have a lot of potential to explore some synergies here too.
Yes, definitely. I already see. I've read a lot about SafeYields in the past days, and I think it's a product of the future. What you're doing, Ethna took one step regarding hedging with just ETH asset, but you are taking it to multiple assets, and the way you are optimizing that, I think that is one of the optimization engine which is very much would be aligned with what we are doing. We already have a DCTS which can hedge, but if we can explore your platform as well, where we can not only explore Ethereum asset, but the breadth of the different assets. I think it's a very value aligning partnership, which can happen, and how it will perceive. We will be adding value to both and each other.
That would be cool. That would be cool. That would
Yeah,
be
we're
cool to see.
definitely glad to have met you guys as well, and to explore future synergies, I guess. So
Yes.
wrapping up, what's one thing you're excited about in the coming weeks for Autonomint?
So we have completed our audits and the product is finally built and we are about to launch. So we already have the support of Optimism and Mod. They gave us around 150K worth of grants already. And our fundraising campaign is also going on. We have already committed some investors. There's also already some liquidity commitments as well. So just about to launch this product and sending out a lot of invite codes. The target is that by the next few months, gain a good amount of TVL and see how it goes so that we can plan our launch in the mainnet. Initially, it will be a closed beta launch, but and we see how it progresses, and over that time, when we have attained a minimum amount of TVL, then we will be going ahead and launching our mainnet. But the product would be live in a couple of days very soon.
For people who
Congratulations.
want to explore Autonomint, how do they go about like your website, etc.?
So yeah, they can visit our website, and we have a form there. They can fill up that form. We'll be sending them an invite code once we go live, which would be in a few days. They can enter that invite code, and they would be able to access the platform. Initially, it would be limited to the people who only have those invite codes. They can potentially refer that codes to the other users and invite other platforms. So yeah, and there is a lot of incentives and everything, which probably would be just suited for those people who are participating in the invite code. And definitely, if you are an initial user, then we have a lot of plans for you guys.
Simple as that. Filipe, any alpha for the coming weeks for SafeYields?
Well, we've just, I think, so I have to talk with Bogdan, our co-founder, and he's, CTO. He's the one who deals with everything that's technical related. But we're getting some feedback today from our algorithm. So the way it works is, we fetch information from blockchain and we churn it, and usually it takes around 24 to 30 hours to do so because there's a lot of information going on. And we're developing this new strategy for concentrated liquidity, and which is delta neutral. So the way it works is we open a concentrated liquidity interval of we deploy these assets, concentrated liquidity, and then we hedge against it. Hyper liquid or centralized exchange, whatever. So we kind of like tackle impermanent loss in it, and because concentrated liquidity has so much yields going on at a single time, this kind of has a lot of potential. So we're getting the results today. I still have no idea what the results would be, but it seems like the algorithm, or MAI, let's call it, is getting some good results on it. So I'm hoping that in the next 2-3 weeks, we'll have something new to share with you guys. Maybe Autonomint will come along in the equation as well by the end of the month. Let's see how it goes. But yeah, just look forward to that. On our end, I guess we'll have a very high yield performing delta neutral strategy coming up. That's what we hope for. I'm not promising anything, but that's what we're trying to go.
It's in the pipeline.
Yeah, it is.
Amazing. Okay, guys. Well, that's pretty much a wrap. Thanks again to you, Akshit, from Autonomint. If you want to see how delta neutral lending can create true utility in DeFi, visit autonomint.com. If you want a curated signal and yield access, head over to safeyields.io. And until next time, stay sharp and stay safe.
Yeah.
Thank you, guys.
Thanks a lot.
Thank
Yes.
you.
Thank you. Bye.